we've had so many members over the last like quarter that are like, I have like a lot of money right now and I don't know what to do with it. What's going on, guys? Welcome to today's episode of the Collecting Keys Real Estate Investing Podcast. This is a real estate operator podcast made by real estate operators for operators so you can continue to grow and expand your business while the market tanks or explodes or does whatever the hell it's doing right now. I don't know. I think I know you talk to. Seems to be all over the place. The average fundamental says that it's kind of looking a little ugly, but I still have talked to people who are like literally on the phone earlier today. I was like, well, when interest rates are half of what they are right now in a year, I'm going to be refinancing everything. I'm like, that's a stupid thing to say.
Good for you, dude. Honest. Good for you, dumbass.
There are very smart people that said that we're going back to like the 3 to 4% rates. Like they already thought we'd be there, and they were proven wrong. Like
there was
no one knows.
I was I don't remember which podcast it was on, but I was listening to one of the podcasts. They were talking about like some of the fundamentals actually like point towards like 11% rates. And I'm like, holy shit, like that would be crazy. Like back to like 1980s, because if you actually just kind of look at like where the treasuries are at, and like if you look back in history and what it's doing, and I don't remember all the fundamentals, I'm doing quotations, what the fuck that means, but I was like, that would be crazy.
Well,
I don't think we could get there. I could be wrong, so. But there's just no way.
I guess what's your argument? Like,
so
why
it won't happen because traditionally, right, loans have been based off of the treasuries, 10-year for Fannie Freddie, 5-year for DSCR. The problem is, so like there's also now major institutions that have billions and billions of dollars that are looking for debt. Money, particularly debt, is a perfectly competitive market. If you go and you look at like any lender, whether it's, a private loan or it's like a DSCR kind of like long-term loan, all the costs and rates are kind of in the same ballpark. And so if all of a sudden the trend starts going towards like the stuff that's being based on the treasuries getting to like the 10, 11%, you're going to have like the hedge fund that has $100 billion that they're going to put towards notes that will come and say like, okay, well, you guys can do that. We'll just do them at 8 or 7.
Maybe. I mean, you say that, but like also, I guess for argument's sake, the Fed could just raise the overnight rates if they need to.
So Mike has a good point about like there's more demand for that. So like competition would drive the yields down. But the other aspect of this is, so try to keep this short-winded. Nixon took us off the gold standard in 71. The inflation was kind of the late 70s, early 80s. Volcker is the one that got credit for quote unquote crushing inflation by driving interest rates to those 10, 11, 12%, right? But the overall theme throughout the 70s, 80s was debt to GDP ratio was like 30 to 40% for the United States. So the amount of debt we had versus over gross domestic product was 30 to 40%. Now it's like 120 to 125%.
Yeah, right.
And so you can't do that kind of math anymore where it makes sense. We had room for 12% interest rates back then. We don't have room for that now.
Yeah, it just wouldn't happen.
That's fascinating. That's a great point of view, Dylan. Honestly.
Yeah. Like that's the whole thing is with debt, there is a customer that needs to be willing to pay that for the debt. And if no one's willing to do it, it'll go away.
That is very true.
Yeah. So not only just the sheer amount, like volume and level of debt, it's the debt relative to the income of the United States.
So if you think about it though, where did we peak at? Like as far as just like typical 30-year fixed? Was it like 8s?
It was like, I think it was up to like 18. Like
you mean recently, Dan, or like back then?
Sorry, within the last 12 months.
Oh, in the past 12 months. Yeah, I was like in the 8s.
Yeah, so we really weren't that far from going to 10, which is, I would have said a year ago is nuts. There's no way, because I'm in the same argument as you guys, is like, it just doesn't make sense because there's no market for it.
I mean, that is far away though, right? Like 8 to 10 is pretty big because there's not only a fundamental difference that has to happen with the market, but there's also a psychological ceiling there, right? Like eventually you would get to a point when it was 8.9, 9%, where everyone would just stop doing loans, right? And like maybe you can't sell anything.
Because like naturally something has to happen, right? Like so prices would have to drop. So if you could go and buy a $250,000 house for like 150.
The thing is that doesn't matter because most people don't think that way. That's too macro for most people. Most people think about what's directly in front of them, which is what's on their Facebook feed, right? And it's what's in their monthly budget. And so even if they could buy like a discounted house, they have to get a 9.5% rate just because they knew that rates several years ago were 5%, they wouldn't do it. Like,
Yeah,
I
think the market would slow down for sure. I agree with you. I don't think that it would be enough to stop it because the same humans in the 80s that are today were the ones buying them at that high rate. So I think I think things would still move. I think there is a psychological factor, but I think the market would have to slow down. And that's the point of high interest rates. And when Volcker did that, it was because he wanted to break inflation. And he's like, we're shooting the freaking rates up and we're going to break this, and we're going to break the job market, and then we're going to come back to reset. And that was the whole point of the 80s, which is a different time in general anyways.
Sure. I think the major thing that's different between now and any time in the past is the rate of change that people are accustomed to is significantly faster. Right? So like in the 80s, if people are like, well, we're going to just wait for 5 years. Now people don't wait 5 years for fuck all, dude.
Yeah.
Like,
but they didn't though, right? People still
had to travel by
business.
A fucking newspaper, Dan. Like, it had to be slower.
Right? Totally.
Yeah, but I'm just saying, people still bought houses because you have all these dummies that are like, I owned a house at 12% interest rate. Like when that's every single baby boomer, you're like, well, I guess people were still buying houses.
Yeah, I mean that's true, but like the main argument is that their living expenses were still so much lower, even with the 12% rent than they are today. So that I mean. That's going into the boomers are how they are unrealistic with everything.
I will say this. You want to know why their living expenses were cheaper? This is actually fascinating. I've never heard this. This was like the anti-boomer conversation. They didn't fucking Uber Eats. They didn't have like all the bullshit that we have and we spend money on now. They're like, sorry guys, we're not eating out tonight. Because they didn't live that way.
How have you never heard this? I feel like this is like Dave Ramsey 101. If you
don't listen to Dave Ramsey, dude.
It's like the hedonic adjustments that the economists uses for like cost of living. I don't buy it. Like, yeah, you can have the nicest shit, but like, I don't know. It's not an apples to apples thing.
It's not for sure. Because like, I mean, they had other costs, I'm sure, that were higher. Right. There's like in terms of like percentage.
Yeah. TVs were $2,000.
Yeah.
Right.
Totally. Right.
Yeah.
You know, and people,
it was tougher to live back then, dude.
If you add in like subscriptions, your cell phone, all those different things, so you add fundamental, like incremental costs, but it's not like it's for the average person. It's not like it's a huge percentage of their income. And if it is, they have the ability to reduce those.
I've actually never really gotten into this argument. I always joke about the whole boomer thing, whatever. It's funny. But like, do you guys really think that it was easier for a boomer to make money, a baby boomer to make money than it is for us?
To make money is your general argument?
To make money?
Yeah.
No.
Yeah.
I think it was easier to follow a traditional path and make a wage that was sustainable with just the average lifestyle.
Yes, that's interesting. Make money, no, but what Mike just reiterated, yes.
The problem
because I think we would all agree right now is the easiest time to make money in fucking history of the world.
And that's the problem, so right? Easy. Is those of us that have all figured it out, we do that. And when it becomes easier to make money, when you go to a phase where the standard is now that you have 2 income earners per house, so the average household now has more money. When you have people that are doing gigs and other things to make more money, those gradually drive prices up because what all the companies look at is they look at consumer patterns. For everyone that can't make ends meet, there's other people that are making more money and spending more money. And so it drives up prices, drives up demand, and basically just people that aren't keeping up and doing the extra stuff, quote unquote, they fall behind.
Is that the baby boomers' fault or is that the millennials' fault?
That's capitalism's fault.
Yeah.
Right? Like I wouldn't say it's a generational issue on that. That is just the fundamental growth of capitalism.
Right.
There's a fascinating chart out there by just like the Federal Reserve publishes it, but it's basically like productivity versus income. But because of technology, because of cell phones, because of computers, like humans have become more productive in their 40-hour week jobs.
Of course.
But like that, it's like a exponential curve that productivity goes up, but the wages don't necessarily keep up with that, even though you're putting out more and more productivity into the world, into the economy.
Interesting.
I think the biggest thing is people's, like, a lot of people want the lifestyle, which makes sense, to be able to go and like have a single income household with like a stay-at-home spouse to watch the kids, and they want to be able to go and be a postman, whatever, and like have a house and do all sorts of things. They like the idealistic view of that. The problem is that there's so many people that are willing to do more that the people that are like fixated on that lifestyle just fall behind, right? Because like even for me, like when I left my engineering job and I was like, okay, cool, I got to figure out how to make money. I got a job at a gym. I went and fucking drove for Uber. I would just like do random stuff to make money. It was like obscenely easy, honestly, to pay my mortgage.
Right.
I just had to figure out what to do. And like I was doing stuff at off hours. I was driving Uber at, 9 o'clock, 10 o'clock at night. But that's what you had to do to get by, right? And people aren't willing to do that, don't want to do that. They have kids. It's inconvenient to do that. Totally get it. But like for everyone that's not willing to do that, there are people like me that were.
You're making a bad argument, man. You're
up.
on the boomer side here. You just got to pull yourself up by your bootstraps.
Dude, I'm 100% on the boomer side with this, honestly. Like, I have very, very little like sympathy for people that live in the United States that can't figure their shit out.
Yeah. Like they're the land of opportunity, right?
Totally, dude. Because you look at how many people come to the United States with fucking nothing.
Yeah.
And they figure it out. Like, if you're already from here, you can blame the school system, you can blame your lifestyle, your upbringing, the zip code you're born in, all those sort of things, totally. But for every person that says that their circumstance is why they can't figure it out, there is somebody else that is the complete counter to them.
Yeah.
That's a great argument.
Yeah. There's like this Venn diagram between the people who, like us, I would say, who figured out the game. We self-educated on real estate, on business, on investing and finances, and we are now rewarded for that. But you should also have this other side of the spectrum where you can be the mailman and be able to at least live a comfortable lifestyle where cost of living isn't so bad that you're like, I just want to be a postman, right?
By the way,
having a middle class is a good thing.
Doing well. Mailmen are doing well. Don't
okay, pick a different, blue collar trade or whatever it is.
Okay, blue collar's not even a good choice either. They're doing better than all of us, dude.
Yeah, right.
True.
So I think there's two main things that on this that regularly, I would say, don't get addressed, right? There is a culture of people, I see this a lot on Reddit, where it's my typical main social media, there are a lot of people that are like, man, it sucks that you have to have like the hustle culture and the desire to grow all the time because I don't want to live a lifestyle like that. That's totally fine, but that just means that you're going to have a lesser lifestyle than those people that are willing to do it, right? That's natural selection. Right. That's totally fine. The second thing that was never discussed anywhere, and I don't know why, because I think it's very, very important, some people are dumber than other people, and that is okay. There is a range of intelligence and the ability to learn and the ability to apply knowledge that will separate human beings. And for some reason, we try to make all decisions as if everyone is the same level of intelligence.
We're not equal, man. That's why Mike and I were actually having this conversation briefly, not about the intelligence level, but like it's like the Kobe Bryant theory, right? Like where Kobe Bryant was Kobe Bryant because he fucking had something in his brain that allowed him to work harder and be better. Tiger Woods, the same thing. Like when you go to like the Masters week, Tiger Woods never one time competed in the Masters and played with his son or any of his family earlier in the week. Because he's like, fuck that. I'm here to win. Yeah. I'm not here to have fun. Like those kind of people.
Tom Brady, another good example.
Tom Brady. They sacrifice and will sacrifice everything to
so they're
win.
At one end of the spectrum. And like the other ones are just like the, people who rely off welfare programs is the way I can put that.
Well, and not only that, but there is a fundamental difference in how people are born, right? So like some people are born smarter. You can have two parents that have 3 kids and there will be one that's the A student and one's just kind of the C student. There is a level of, there's a genetics,
there's some nurturing in it too.
Piece. You can have kids that go through the same school system and work hard, and some of them, like, they crush in math. Other ones, they just suck. What that is, I don't know. But there is a natural difference in intelligence, which will basically determine the outcome when it comes to these kind of things.
As long as they apply themselves in the proper area. Because, there's some people in India that are fucking super smart. They're not doing all right.
Absolutely, dude. There's people all over the world that are geniuses, and they never get the opportunity to harness that. And that's the way the world works, right? That's unfortunate, maybe. I don't know. There's also people here that are dumb as shit that get very, very successful because they learn how to take advantage of the opportunities and they kind of like scrape by through connections or whatever.
To cap this off, there's a tweet that I should have sent you guys the other day. It's from a Britain guy, but he said, 50% of my British friends are 10x smarter than my American friends, but my American friends are 10x more self-motivated or like have a belief system. So they're 50x in front of my British friends.
Interesting.
Totally. Yeah. So like the intelligence is there or might not be there, but they just have the self-confidence that they can do it. So they get more shit done.
Yeah. That's why we won in 1776, dog.
Well, and I think that is like that really shows like the individualism that exists in the United States, which is kind of unique, honestly. But, for all the people that are like that, it's funny. People like rip on China. Where there's like the 400 million people that live in prosperity in China, and then there's the billion people that don't.
Yeah.
We don't have that much of like a difference if you look at it in the United States, right? I'd be curious, I don't know what the ratios are, but we have that same kind of like mentality, right? Where there's a ton of people that are just like bought into the system, they're into the hustle culture, they're into the land of opportunity, they do very well. And then there's a bunch of other people that just like don't do it, or they're like out in the middle of the fields, they're in the rural areas and they fuck all, and they just kind of like exist, right? And the difference between us and China is China's like, yeah, fuck those people. They're over there. We don't care.
You guys don't want to be part of the game. Fuck off.
Yeah. Whereas like here, they have all the same voting rights. They have this, like a lot of policies are written around them. They're kind of like utilized, right, in a different way.
This depressing theory I saw the other day was basically the unwritten and written rules of society are based on the bottom 15% of the population.
Yeah.
It's like to protect them and to be like, you have to make this process so idiot proof that everyone can do it. And like, there are levels of the population that are
it's a school
like
system. Why there's a lot of problems in some of the schools, not all the schools, but some of the schools because of that. It's like the no kid left behind policy.
Yeah.
Yeah.
Like you can only be as smart as the dumbest kid in your class. And that's a legit policy.
Yeah, exactly. So anyways, we got way off.
We got on a tangent there.
Man,
but
there for sure.
Let's talk about this whole like artificial food coloring. Fucking pissed off about this thing, dude.
When's RFK coming on, Dan? You got to get him on here.
Oh my God. No, dude, I want to talk about these gurus that we're watching die left and right. I feel like we haven't done any good guru bashing on here for a while.
Yes.
But yeah. I saw this. It was on the Ball Busters Instagram, which if you guys don't follow that, you definitely should.
It's pretty good.
But his like, he typically picks on gurus. He's done stuff around like pace and, Andy Elliott has been his biggest target recently. How much of a fucking creep Andy Elliott is.
Dude, he's such a weirdo, dude.
His most like recent thing you went into, and this isn't, I would say this is kind of showing like the downfall of the gurus because it's showing like how extreme they're getting trying to get attention. But Andy Elliott is the sales guy. Go look him up. I don't know. He's a dummy.
He's a dude that wears a shirt with his name on it, so you know what that means.
His whole thing is like, if you don't have a 6-pack, you can't work for me because you're a piece of shit. And he had his 14-year-old and 10-year-old daughter.
9-year-old daughter, 9-year-old. Not even double digits, yeah.
Up on stage, basically taking their shirts off to show off their 6-pack at this event that he was speaking with. It was like David Goggins' event too. It was pretty weird vibe.
Yeah, that was a weird vibe.
And like, at what level do you decide that that's appropriate to go in front of your mostly male audience that is going to be between the ages of 20 and 40, and you have like your teenage daughter up there undressing to show off her abs?
It wasn't that they were taking their shirts off. They're also wearing like, and he even addresses it in the video.
Yeah.
Like
he does. Like, he says like, don't be perverts, but like he's the one being the pervert.
Yeah, dude. Like it's like, bro, if you have to say that about your daughters, like my whole thing is as the father of a daughter, like objectifying your daughter. And then the whole thing wasn't even that they had 6-packs. It was that they had to work for it so that they got some sort of like shopping spree, which I also think is the fucking stupidest thing ever. Yeah. And like, they had to diet, so now they're going to have some sort of eating disorder as a 9-year-old who worries about having a 6-pack because their dad only wants them to have a 6-pack because their dad says you're not allowed to be in the fucking house without a 6-pack. Like, what's going on here? It's a weird situation.
Super weird. They're showing him going completely off of left field, right? And he's come under fire on a lot of stuff recently, kind of with how he's, there's been a lot of, I don't know, it's like lawsuits or what around kind of his like coachings and different things that fully underdelivered on what was being promised for the very, very large price points that he was charging.
Yeah, it was like $25K for like an hour or some shit like that for like some of his coaching stuff.
Just like insane, and people being very happy about that. But now he takes his daughters up on stage, he's doing this weird thing. And then I guess in that same speech as well, Ball Bus posted another thing where they were talking about how we don't know what it is, but we find that we are explicitly drawn to damaged people. And there the comment from the Instagram post was like, okay, so you're telling us that you are drawn to people that you can take advantage of, like you're like a predator, like you're like cruising around looking for who you can embezzle some money out of.
Wild, dude.
God damn it. So
I'm so surprised that he like has events and like actual people pay to go see it.
Dude, like a lot of people, I don't know,
which is
man.
wild. Like, what is that culture that you're building within like either your company or yourself that's the guy you want to go get sales training from?
But so he's going off left field, but then also Pace Morbius had this whole thing, and this like kind of came out of nowhere, and like it really feels weird to me, where he's like taking this homeless lady, and he's like trying to like prove a point by teaching her how to do real estate. Yeah, and he's had all these videos of like, yeah, I like flew her out on on this plane, and then he has like all these videos of her like in a classroom, like obviously nodding, like they told her to act like she was really learning something, you know. And I'm like, what are you trying to sell?
Dude,
you know, but then the thing that's really fascinating to me is he's doing this weird, like, I don't know what the shtick is or what the plan is with that, but we just got a Sub2 deal in Spokane, and I was like, we need to figure out how to sell this thing. So I went on the Sub2 Facebook page, like the big free group they have, and like every single post that's on there, when I like went on the main page, it has like maybe one comment and like less than 5 interactions with it. And I'm like, did all these people die? There used to be like tons of
a lot of
posts on
action.
there.
There's no more gator lenders, dude.
There's nothing, dude. Like I was like, the whole thing has exploded.
Yeah.
And I was like, well, were they all fake to begin with? I don't know. And I was literally scrolling through, and then I finally found a post that had like some traction on it, and it was like generally a good question asking about insurance, and it had like 30 something posts, but like the vast majority of them had nothing. And like, has that whole community crashed? And so now Pace is like scraping the thinner and thinner part of the bottom of the barrel, trying to get people that engage. Because now he's trying to say like, look, even a homeless lady can buy a house.
So easy.
Who knows if she's even homeless? So that could have been staged from the start.
Who knows who that person is?
It's like his janitor at his
That's
place.
wild. I guess we didn't talk about pre-show either, the whole Ryan Pineda thing, which we may have talked about on the show once before, but like another big guru that's got a class action lawsuit against him, who Pace also has a class action lawsuit against him. And now it sounds like Elliot will have some sort of lawsuit against him. They're all like over promising, under delivering turds, and they're fucking falling apart, man. Yeah, but the fun thing is they're all still, they're like the 75-year-old actress that's still just trying to go and be the hot young lady in like all the plastic surgery and stuff, and they're trying to get these shows, and you're like, it's just not working for you anymore. You're now grandma, like you should be doing grandma casting, not the middle-aged mom casting. Like you've grown out of it, and they're just trying to claw at fame, you know what I mean? And like that's what they're trying to do, because I'm assuming that's their only source of income.
It has to be. I'd be curious like what the revenue on those kind of communities and stuff kind of looks like, because it can't be good.
Dude. Zero, dude.
You know, because like it's not like people are seeking out real estate education at all right now. It's not the hot button topic that it was even like last year at this point.
My question would be, and because I just don't generally follow a lot of stuff, is in general, is the online courses, online learning going down right now? Like, is it as a whole industry outside of just real estate?
Oh, I'm sure
is it completely compressing and just disappearing? I think there was a lot of it, kind of like during the 2020, 23, probably I'll give those 3 years like time frame. There was a lot of false everything, because the economy was pumped with money. Everybody's in this weird mindset of working from home, and so maybe that part of that industry, the like self-help online, I'm going to do a side hustle industry, blew up, and then now it's just kind of going back to what it should be
in general. But like even in GoBundance, like people would do the Airbnb arbitrage like workshops, or the
like super niche workshops where they like sell
drop
seats.
shipping, like from an Amazon store. It was another hot one. Like, I don't know, some of these things went through that I think are just a product of rising tides, like raise all ships, right? And so I think money was easy. And I think when money isn't easy anymore, some of those things go away.
Now it's AI.
It is AI.
True.
Oh my
now
God.
It's AI.
Everyone's trying to sell their AI fucking chat bot that's supposed to like close leads or whatever. I'm just like, shut up.
You're wrong. Losers.
But you're right, though. There's always something. And I think that whole thing, Dan, is probably on the out, if it isn't already completely collapsed.
It's like indicators for a real estate business. The more influence and gurus there are, the more it's probably frothy and at the top. And now we're here near the bottom, and hopefully that's like a bottom indicator, and things will get better.
Yeah.
Which I think it will be, because I mean, we were talking about just like general business numbers and stuff before the show, and like we did on our scale community call today, we did like a deep dive into KPIs and stuff, and like our April was really solid. I mean, if you look at between our April and May, we have about $200,000 set on the books. So like, and then May hasn't even started yet. We already have that teed up.
Yep.
So like stuff's looking fundamentally pretty good. I would say sellers have been pretty open to having conversations. Our direct mail, like lead flow is down, but the lead quality is up like quite a bit. Like our biggest challenge, and this is where having the gurus and education be on the downfall is kind of a problem, is that our buyers dry up, right? So you have to be doing more wholesales and different things. But I would say like if you are doing more wholesales, stuff's still selling. We talked about this a little bit last week. We've been selling properties over ask if you're in good markets, as long as you're not in Florida or some
and and putting a good product out there and pricing it appropriately is always going to be the way to do this in this market. And I would say too, to add to like the current, I would say, success or just good trajectory we have is reflected in our community as well. We have several people that are, the full-time operators in the community that are feeling the same thing. They're having a good Q2 or good end of Q1 going into Q2, sharing their KPIs. And so I think it's like not just us being uniquely positioned in our market. It's people that are doing the right things and playing the fundamentals and doing the business correctly are seeing that they're having a pretty solid year. And I feel like that happens even in a down market. You're just doing the right thing consistently.
And a lot of them, and you guys will know this better than I would, but they've been in there for almost a year now. Like they're kind of like still improving on their businesses, improving on their sales skills, getting the right people in place. So not only like they're almost like improving into a down year, whereas like some of us started, we were improving into up years. So it's a little bit different of the
totally different.
of a pace of business.
Yeah. Absolutely. And my argument's always, if you can do that on the downhill slope, it's going to make the uphill slope so much fucking better.
Yeah.
Way easier.
Yeah. So, and I think that's the opportunity, right? Like something that is repeated a lot by people that have been around, as entrepreneurs for like a long time, is the most likely indicator of success is your time doing the same thing over and over. That's like a big, like Alex Hormozi thing, or like a lot of the, I would say, proper like entrepreneurial kind of gurus are like that. And if you go and you look at any of like the big multi-billionaire people, super successful people, a lot of them, they've run those businesses for like 30, 40 years, right? Like a super long time. And in those periods of time, they've had up markets, they've had down markets, they've had sideways markets, they've had conflicts, a lot of them, they went through like 9/11 and fucking wars and like different shit, but they kept doing the same thing. And I think that that's kind of the most important piece of it. And so like if you're doing like wholesaling and flipping, you can do that in any market. It just comes down to, are you willing to do what it takes when stuff does get a little bit weird? Are you willing to take the appropriate risks? Are you willing to like potentially lose money and adapt? And are you smart enough to kind of adapt your business and continue to grow?
I want to hear your thoughts on this. This is like the devil's advocate take, because I saw Aaron Amuchastegui, if I said his name right, post on Instagram the other day that he's shutting down one of his businesses. And his caption was like shutting down a business, and his kind of style was like, this happens, but you have to know when to throw in the towel. Started and stopped dozens of businesses over my lifespan, but like the average for his is like 10 to 15 years.
Sure. Do you know, did he say which business he's shutting down?
No, I could try to find it real quick, but I don't.
Do you want to guess which one it is?
Probably the building one.
Nah, it's a Real Estate Rockstars.
Oh, is it Real Estate Rockstars?
That's what I would bet, because
coaching
it's a
kind of
it's a real estate agent coaching. He already wasn't making a major profit off of it, and it goes back to literally we were just talking about, where the fall of the education and gurus.
Yep.
Right. You're starting to see less of that, and so his house flipping company's big. I imagine he's still doing that, but then his main focus is he's getting ahead of the curve. So he's an entrepreneur, he's an innovator. If you guys don't follow him on Instagram, you should. I think it's just that Aaron Amuchastegui. But he's been doing this like prefabbed home business for a while, where basically they take stick-built homes and they prefab all the walls in a factory, and then they can just like bring it all out to a build site, and they can stand up like a new construction home in like a week and a half, 2 weeks. It's crazy. And the homes look great. Like they look like super, super nice new construction homes.
Multi-story. It's not like your typical double wide type situation. It's a proper looking home.
Yeah, it looks like a home that would take 5 to 6 months to build and cost, $600,000 to $800,000 in most markets. So that's like a newer thing. So when I met up with him down in Austin last year, he was like just starting that. So I'm pretty sure he's just moving to make that his main focus.
Yeah.
Which makes sense. If you have so many hours in the day, get rid of something that's not making you money for more hours that is making you a ton of money.
Yeah. And take advantage. This is where you said it, Mike. He's like an entrepreneur, he's an innovator, is like take advantage of the unique circumstances provided to you, which he has very unique circumstances with the Austin market, Texas in general, what he can do. And so obviously if you can be ahead of the curve and figure that out in a metro, and it becomes a great solution, you can make a shit ton of money. But then also there's scalability outside of your market as these other municipalities and other areas like become the next hot spot, where Austin, in 10 years from now might not be that spot, and he can do whenever he wants to do it.
Yeah.
He's ahead of the curve.
I would also say going through that is a different business kind of, but it's also fundamentally a similar business to his flipping houses and development stuff he was already doing. It's basically his way of adapting to a new product within that business.
Right.
You know, so it's not like he's going and starting an Amazon store. Or doing something completely.
Yeah. And some of the people that we just alluded to who are in the, Forbes top 50 or whatever, the business name might be the same, but like they're different companies than they were when they started. Like Amazon, 100%. Like 80% of their revenue is AWS. And that wasn't a thing until halfway through Amazon. Like,
Yeah, AWS was just a side thought. They're like, I think we can make some extra money. We need all this compute power for the store, but I think we could sell it. And then they turn it into 80% of their business.
Huge part of their
created
business.
an entire industry, dude.
Yeah, for sure.
It was a side hustle.
It's interesting how many of those companies kind of go that route. Like YouTube was originally a social media platform, and then
I don't remember that really.
Yeah. So yeah, it was like meant to be like a MySpace kind of
like
Facebook
video sharing though.
Yeah. So like that's why it was like YouTube, right? It was like a tube for yourself. But then it became just like the general video platform relatively quickly after. But there's a lot of those. So I don't know. I mean, when you're looking at stuff, it's just important to making decisions off the numbers, right? And off your data and off of what other people are doing in your industry. Because there's a lot of people that are leaving. But like we look at some of like our scale people, I would say like over the last 3 months, for the first time, we have, and these are scale folks who've been with us for a little while and have been kind of like grinding through the ups and downs of the market. We've had so many members over the last like quarter that are like, I have like a lot of money right now and I don't know what to do with it, which is really interesting. Because if you go back like 6-8 months ago with these same people, they were kind of struggling, trying to figure it out. But we had a conversation with that on our scale community call today, and then with a member at our meetup last week. And he's like, I've never had so much money before. Like, I don't know, like what do you do with all your money? I'm like, just hold on to it, right? Yeah. And there's nothing wrong with having cash available and sitting on cash for better opportunities. Like we talked about this a little bit before the show, but like Warren Buffett right now, he's sitting on tons of cash. And what was the number you said, Dylan, about how much the treasury he owns?
He owns 4.89% of the entire U.S. Treasury market.
That's fucking crazy.
Which is crazy.
Insane.
Yeah. So that's a ton. And there was this little chart that went around a couple weeks ago after the market took its big dump. And it was showing where all the billionaires were. And everyone was down like 20, 30, 40%. And then Warren Buffett was like just up 26%. Yeah. Because he sold all the stuff when the stuff was getting weird and he's been sitting on cash. And if you think about it, right, for most of us, we're not Warren Buffett, but we're not even like a rounding error on his balance sheet.
Not even
close. If you have like $500,000 and you're sitting on it in cash, and sure, you could like go and try to buy a shitty rental that's like super mediocre. You could go and do some loans at that, but you've never done that before. So it's kind of risky, whatever. And you take it and you sit on it for, say, 3 years and it's getting whittled away by inflation. It kind of hurts your ego, whatever, but you just hold on to it. But then in 3 years' time, you find a deal that you can go and you can do that deal and you can make another $500,000, right? So you basically make $1 million total. You just made a 33% return over those last 3 years if you bring it out. That's pretty damn good.
Yep.
And that's way better than going and just like throwing your money into something stupid because you're
just
worried
have
about
it work,
inflation.
even though you don't know what it is.
Yeah, just because you're afraid to lose money, right?
Exactly. It just doesn't make any sense. But I think that when people are new to business, or when I would say if you have a large percent of your net worth sitting in cash and you're used to growing over like the past couple of years, there's like this itch that you get kind of like in your soul where you feel like you're missing opportunity if you're not doing something.
That's valid. And like, Warren Buffett, he's the best temperament of all of these people, right? He's done the same shit. And so he's like, I'm comfortable sitting on billions of dollars, but you guys all go play in the sand and I'll just wait for the right opportunity.
Well, that's the thing, right? Is he's sitting on billions of dollars. So he accumulated a record high cash position.
He even sold some of his Apple, I think, which is a big deal.
He sold Apple like the top, like literally like the top.
So
Smart.
Berkshire Hathaway has a $334 billion cash position. How much of that is their total portfolio? That's way bigger than I was expecting.
A $$334 billion cash position.
I'm pretty sure that's just their cash position.
Yeah, I'm guessing they're poor. I'm guessing they're well over $500 million
Hathaway
in portfolio
value. Is that the total market value?
$500 million, $500 billion.
Berkshire Hathaway.
So if that's true, that means they're sitting on like 70% cash, which is insane.
Yeah. He's been talking about it not just for like the last year or two, like for the last several years that he's been accumulating cash. Because his biggest thing with Warren Buffett,
it's 1.15 trillion. So sitting on about 30% cash position for their overall portfolio.
Yep.
Yeah, and his whole thing, like I watched an interview with him a couple years back, and he was talking about the biggest challenge with being so rich is that there's actually not that much opportunity, because he can't go and buy like you and I can. We can go and buy this or that. He's like, what's for sale that's worth $300 billion? There's not many things.
Yeah, and he's limited by his size for sure.
His size, and in his mind though, when he adds that to further complicate it, he looks at the company's balance sheet and their P&L, and he determines what their worth is, regardless of what the market trades it at, what its PE is. He determines the value. And so of the companies that he could buy for that much, he only believes in so many of them. And he's not going to sell Apple if he thinks Apple's going to keep growing at a rate that's what he wants. So
the treasuries are paying him 4 or 5%, somewhere in between those ranges. And he's happy to sit on that, even if it's not you can buy tips or inflation adjusted treasuries. But my point is, he's probably waiting for some kind of downturn to happen. And so that when it comes back up, he's getting a 50%, annual compounded growth rate.
Yeah. Do you think he's looking for a general downturn though? Or do you think he's looking at specific markets? Because I don't believe that he buys because there's a general market downturn.
I would think that.
There's a recession. What's he going to go do? Buy 50 Apple stocks and 50 this?
He could load up on some of his own current portfolio, just have larger positions.
I just don't think that he's thinking creative enough, because right now for $157 billion, he could buy Morocco.
That's it? What's Morocco?
The whole country.
I thought it'd be like a company.
Yeah.
No, dude. Basically, he'd be buying it on a 2x multiple. Their current GDP is $157 billion. He could buy it on a 2x EBITDA.
That's not a bad deal. That's not a bad deal.
Can you actually buy a country? I wonder what that would be.
I mean, I guess going back to this, going from, I was a broke college kid at one point, so having zero money to having money and not having what to do with it, and being like a quote unquote professional investor is different and a different skill set than being an operator, especially in real estate.
Mm-hmm. It is very different.
I would just lean to people who maybe are wealthy. Like, what are you doing with your money, bro? Like,
and here's the thing: is they're going to probably know fuck all, or they're going to be going off of their previous experience, which has got them where they are so far, right?
Yeah.
And also, but it's important to understand if your person that you're talking to is wealthy because they're old and they've been in the market for a while, or if they're young because they earned it by generating it in business. Because they're going to have very, very different opinions. If you go and ask, Dan's father-in-law about generating wealth, he's going to talk about putting it in the market because that's what he's done forever, right? If you go and you talk to, I don't know, I'm trying to think of who I would be a good example.
Well, and like the other part of this is it's just your stage of life and what your goals are, because you're young and you want a $20 million net worth one day. Maybe you do redeploy that capital earlier to try to, keep it growing and growing and growing. But if you're 50 years old and you're pretty content, maybe pay off your mortgage if it's at 7%, because that's a guaranteed 7% return. Like there's just different avenues to that.
Yeah. Timing is a big thing, and age and where you're at and what's your, go back to what Mike said earlier about comments, like what is your capability?
Mm-hmm. Yeah. Also true.
What is your skill set?
Yeah, and on that note, just to round this out, I think that when times do get kind of weird and there is general uncertainty, it does make sense to take some chips off the table, maybe delever yourself a little bit, so that way, in case you do end up getting into a situation where the market's heavily turned against your business, you're trying to figure stuff out, at least you're not being left out to dry, and you can just make some business adjustments that kind of cover it. So
you don't want to be last when that shift starts happening.
Exactly.
No,
you want to be in the chair when the music stops.
Exactly. Although if you are the last one out when things go down, you're probably going to be the first one in when stuff goes back up again. So
very true. Technically, if you never get out,
you never leave. Yeah, you just keep on grinding. So, but awesome. All right, guys. Anything else to round out?
I'm good.
I'm pretty rounded.
All right, guys. Thanks for listening. You guys have a great rest of your week, and share the show with anybody who might find it interesting or is interested in real estate. I know there's at least like a couple hundred people interested in real estate still. Go and find them and share the show with them. It really helps us continue to grow the show. We appreciate it all. So thanks everybody, and we'll see you guys next week.
See y'all.